Welcome, dear traders. Asian stock exchanges kicked off Friday in the black. The US stock futures are also up following a rally on Wall Street. Yesterday, stock indexes logged the biggest intraday gains in more than 2 years. How is the trading unfolding on Forex? Watch our video review and find out. Let's start. The inflation report released yesterday showed that consumer prices had been slowing for 4 months in a row. The CPI dropped to 7.7%, reinforcing hopes of a pause in monetary tightening. Notably, stocks have notched a meteoric rise on such expectations more than once. However, analysts are warning against excessive optimism. The Fed could revise its stance only if inflation runs steadily at the 2% target, not 7.7% or even 5.8% for core CPI. The regulator pays great attention to changes in the core CPI. However, Fed policymakers believe that the reading is still high. Nevertheless, market participants are more optimistic. According to the FEDWATCH tool, the number of traders who are betting on a 50 basis rate hike has already exceeded 83% today. Yesterday, before the release of inflation data, the figure was only 52%. It will probably take a few more months before the central bank feels certain that inflation is returning to the 2% target. Yet, in the near future, the regulator is likely to raise rates to make sure that inflation is slowing down. Such Fed officials as Patrick Harker, Lori Logan, Mary Daly, and Loretta Master have already expressed their opinions on the matter. President of the Kansas City Fed, Esther George, said that the main risk in the fight against inflation will be an insufficient rate hike. Judging by the comments of Fed policymakers, the regulator will remain strongly committed to aggressive tightening. Inflation remains stubbornly high. The regulator needs to tame it, not just stop its growth for well. Therefore, the Fed will need a balanced approach when raising rates. The US dollar is rapidly dropping due to the optimism on Wall Street. Yesterday, the US dollar index plummeted versus its main rivals by more than 2%, notching the biggest intraday decline over the past 10 years. In the Asian session, the US dollar index was trading with losses at 107.50. Bulls are lacking drivers to start a recovery. Investors also took notice of the comment of Nick Timiraos, the chief economics correspondent for Wall Street Journal on Twitter. He assumed that the Fed is likely to undertake a smaller rate hike. This suggestion also triggered a decrease in the US dollar. Today, it's moving in the downward range of 107.60 and 108.40, and it may enter the week at a new record low. US government bond yields also extended losses, slipping to a 5-week low. On the Thursday, the yen, sensitive to any changes in the US treasuries, sharply climbed by 3.7%. It logged the best intraday gain since 2016. In the Asian session, the dollar-yen pair won back some of its losses and recovered slightly to 140.90. The yen is grabbing amid expectations of a new intervention. Today, the pair is consolidating in the price carried over 140.00 and 142.50. The downside pressure on the pair increased today after the speeches of two policymakers, Finance Minister Shinichi Suzuki and Masato Kanda, who is responsible for instructing the Bank of Japan in conducting interventions, provided some verbal support to the yen. Apart from that, Joe Biden and Japanese Prime Minister Fumio Kishida will meet on Sunday. The results of this meeting may also affect Forex. The Aussie spread wings following inflation data in the United States. It advanced considerably despite dovish remarks made by the Reserve Bank of Deputy Governor Michelle Bullock. She said that the regulator could soon take a pause in the rate hikes. The Australian dollar rose amid external news such as inflation data and a possible pause in a monetary tightening by the Fed. The AUD-USD pair soared to a 7-week high. Today, it managed to grow to 0.6668. In the Asian session, the pair was still fluctuating in the upward range of 0.6579 and 0.6669. And that's all for now. Hit the subscribe button and stay up to date with the latest market news. And see you soon.